ignore the letter. Keep the passion. Right now. Action! Keep moving.
I never knew it could be like this.
Cut!
I can't work like this!
Don't let litter ruin your scene.
Come and join us at the Santa Barbara Arts and Crafts Show. Over 40 years of showcasing some of Santa Barbara's finest artists. Quality, variety, meet the artists, free family fun. Every Sunday along Cabrillo Boulevard east of Stearns Wharf. The Santa Barbara Arts and Crafts Show. Experience the tradition.
December 18th. Okay. The meeting of the City of Santa Barbara, the City Council's Finance Committee for December 18th, 2012 will now come to order. Any members of the public wishing to speak on items not on the agenda? Seeing none, we will go to our first and last agenda item.
Yes.
Mr. Samario.
Thank you, Mr. Chair, members of the committee. Bob Samario, Finance Director. And we're going to spend about 30 to 40 minutes today talking about our comprehensive annual financial report, we call the CAFR. And this is for the year ended June 30, 2012. And what I'm going to cover today, and actually I'm going to, one piece, the last piece will be covered by Mr. Rich Kikuchi, who from our audit firm. He'll cover the audit requirements and results, but I'll be covering some background information, how to read the report, sort of its layout and format, because it is a big document, as you can see in front of you. Some financial highlights. These are really high-level highlights. And then, as I said, we'll get into the audit requirements and results. So forgive me for, I know some of the basic stuff, but just to kind of answer the question, what is a CAFR? It's important to note that it is something we only do once a year. You know, as you know, we come to council every quarter. We provide on a consent calendar basis monthly reports on how we're doing revenue and expenditure-wise. But this is an annual report that we prepare. It's a pretty lengthy process, a big report, and it's something that really virtually every company or every government organization produces on an annual basis. What's important to note about it is it's standardized. It's not something that we produce that, you know, in our own fashion. If you were to look at any city across the country and look at their comprehensive annual financial report, it'll look exactly the same sections, different numbers, different words, but you can find the same things in the same places. And it's prepared, and this is an important point, in accordance with what's called GAAP, or generally accepted accounting principles. That means, you know, across the country, you're not going to see a different kind of reporting treatment on different transactions. It will all be consistent from entity to entity. Its purpose is to present to you and to the community the results of our operations and with our financial condition. That's the whole point. How healthy are we, and how is that changing over time, particularly in the last year. We call it a comprehensive annual report because there are certain sections in this document, particularly the last section, which we call the statistical section, that isn't required per accounting standards. And we do that for two reasons primarily. One is because it allows us to submit the document for what's called the GFOA award program. It's a recognition program for excellence in financial reporting, and we like to sort of submit for that because I think it's important. You know, it's just a higher level of standard that we impose on ourselves. But we believe it also provides more information to the readers about the city's finances. So it's prepared because it's required by our city charter. We are required under the city charter to prepare an annual financial report that is audited by an external or independent certified public accountant, or CPA. It's also required by state law. And it's important also in issuing or selling bonds. Credit agencies, you know, when they evaluate what kind of credit we are, therefore what kind of interest rate we might have to pay on debt, they look at our CAFR. They actually read this very carefully. They know what it says. They're very familiar with this document. And they use that as a basis to evaluate how healthy we are and our ability to repay any bonds we might issue. And then we also prepared because we think it conveys important information about the city's finances. The budget sort of looks forward. This looks backward about how we actually did relative to the budget, but just in general. So the layout and format, I'm going to have you periodically refer to certain pages as we kind of go through this. So if you can go to the table of contents, and I'll turn to that page as well. It's page I. It's one of the first pages in the document. So what you're going to see as you look through the table of contents is that there are three main sections to this document. This section we call the introductory section. And this section includes a letter of transmittal, and it also provides some information about the city's organization, like the list of city officials. It has an organization chart. And this portion of the document is not covered by the audit report. So when the auditors come out and issue an opinion about our financial statements, they don't reevaluate this. This is just kind of our information about the city, and it's just additional information that we like to include. The main body of the document is the financial section, and this is, as I said, is covered by the audit opinion. It includes a 2-page report from Lansall and Lunghart, our auditors, again, the partner being Rich Kikuchi, and this is where they tell us how we did in a real brief version. We also have a document or a section called the Management's Discussion and Analysis, which I think is really important because, as you can tell, there's a lot of numbers in this document, hard to really understand what it all means. And the Management's Discussion and Analysis, which we call the MD&A, is sort of the budget message of the budget document. If you want to sort of read one thing in the document, that's the place to look. It highlights, how we had ended the year, some major transactions, major items that came up, so an important part of it. And then there's what we call the basic financial statements. This is sort of the core of the whole document. If you were to lift this portion out, you would be able to discern how we did this past year. And then the footnotes to the financial statements, that's also very important. It provides a lot more detail about the numbers. And then the part that I sort of mentioned before, the statistical section, this is the part that also unaudited, but this is the part that makes this a comprehensive annual financial report. We don't need to have this section, but we put it in anyway. And it provides a lot of good information, and it also goes back 10 years on a lot of the data. So we're going to focus our presentation, or I'm going to focus the presentation today on two parts, the independent auditor's report, which Rich will cover later, and then the basic financial statements. So within the basic financial statements, it's organized into two sections. And I think this is really important because when you look at this, it's easy to get confused. But there are, in the first few pages, and I'm going to have you turn to page 24. You'll see that there are two pages opposing each other. This is what we call the government-wide statements, and it was newly required back in 2001 for a lot of reasons. But this represents a consolidation of the entire city, all its funds and operations, into two categories, what they call the governmental activities and business type activities. It was required back in 2001 because there was a lot of, criticism. There's perceived criticism about government because, generally speaking, when you look at the old version of financial statements, you really couldn't assess the financial condition of an organization in the old way of reporting. So because we report things on an accrual basis, and these statements include all the city assets, and long-term assets, short-term assets, and all debt, it really does allow the reader to assess the financial condition of our city as a whole. It's a little hard to do so, in my opinion, because it consolidates a lot of things so that distinct operations into one column. For example, all of our enterprise funds are in one column. But the theory is that this helps the reader, should help the reader see, are we in good financial condition, and is that kind of financial condition getting worse or better over time, at least over the last year. And then we also have what's called behind this, the rest of it sort of in the several pages beyond that is what we have, the old way of reporting the individual fund financial statements. So we think of the general fund. You'll see that the general fund is shown by itself as a separate column. And this is the format we've had for many, many years. It's reported differently. We're not on an accrual basis necessarily. It's what's called a modified accrual basis, and we'll talk about what that means. But essentially means that only short-term assets and liabilities are included on the balance sheet. But the purpose of this report versus the government-wide is not to assess the financial condition. you can't assess the financial condition on these individual financial statements. It's really to determine what kind of spendable resources we have available on any given point in time, like reserves. We talk about reserves. How much reserves do we have? We don't care how much we have in terms of equipment and buildings from a budgetary perspective, because you can't spend those things. This is really liquid assets that we're kind of referring to here, or focusing on. So financial highlights, I can't really give a report without mentioning the fact that this document reflects some significant changes because of the elimination of the RDA, or the dissolution of the RDA on January 31st. So what you're going to find if you were to go through the financial report is that there are several changes that are reflected. One is the fact that we had to reverse the transfer of assets and liabilities from the RDA to the city that were made in June of 2011. So last year, for the fiscal year ended June 30, 2011, right in that June, you might recall that we came to council and asked them to transfer all the assets of the former RDA to the city. That was in anticipation that we were expecting the state law that would potentially dissolve the RDAs. So as a way to sort of protect us from any action, we transferred all those assets from the RDA to the city. Well, with the law that came into place, it became clear to us that we shouldn't have done that, or we at least need to reverse that. So what you're going to see is a reversal of all that we did in June of 11 in this current year. And then on January 31st, when the RDAs effectively did go away, we didn't have to, at that point, transfer things back out. So we sort of said, well, we did in 2011, but we shouldn't have, so we reversed that. But then we made it occur on January 31st, 2012, when the RDA really became, when it really became dissolved or eliminated. So again, big changes in the financial statements. And what we've done is we've transferred all those assets as of February 1st, effectively, to a new fund called the Successor Agency Private Purpose Trust Fund. So we have this new entity, in a sense, the Successor Agency, that now accounts for all those assets and liabilities of the former RDA. And the only exclusion of that is the housing portion, which has now been transferred to the city. But everything else that used to be part of the RDA is accounted for in the Successor Agency Fund, which is a private purpose trust fund. So on page 24 is, again, the statement of net assets, government-wide statements. I wanted just to kind of walk through with you on this a little bit of some of the highlights. The first thing I wanted to indicate here, if you look on the screen, is that in red I boxed in what are called the business type activities. And it's easier to talk about this versus the other column, because this is essentially all of our enterprise funds consolidated into one column. So our water fund, wastewater fund, downtown parking, airport, waterfront, our solid waste fund, all of those activities are now consolidated into one column. You can decide for yourself whether there's value in that or not, but that's now a requirement that we do that. Next to that is everything else, all what are called governmental activities. The primary activity being the general fund, of course, the biggest fund we have in the city, that's in this column. But it includes things like our Creeks funds, things that are always called special revenue funds. Creeks Fund, Measure A Fund, our CDBG fund, streets funds. All of those are activities are now reflected in this one column. One of the things I think is important to note, as I said before, is that this includes and reports all of the capital assets. And we've always done that with our enterprise funds. You've always seen in their balance sheets in the past that, all the water mains or sewer mains or whatever those assets may be. But you typically wouldn't be having that conversation when you're talking about the general fund. But this, in the governmental activities column, for example, you see all the capital assets. And you can see that it actually pretty close to what we have in the enterprise funds. You always think of enterprise funds as being capital intensive, but there are a lot of capital assets in our governmental activities. We have $306 million of assets within that column. So it's the streets, sidewalks, it's buildings, it's land, all the things that are part of the governmental operations. So we have quite a few assets, and this is based on historical costs. So it's not market value, it's all historical cost. And then what you also see is all the non-current liabilities or long-term debt. Always have seen that in the business type activities column for water fund, any revenue bonds you might have. But you typically don't see in the governmental activities. When we talk about the general fund, it's long-term debt. And there's about $21 million of debt within the governmental activities. Part of that is not sort of bonds, but it's things like accrued leave. It's things like claims that are payable, so things that are not related to long-term debt per se, but still apply to our governmental activities. In the business type activities column, that's primarily bonds. The water, the wastewater have a lot of revenue bonds. As you know, they also have a lot of state revolving loan debt in those funds. And then this bottom section is supposed to tell you the true financial position of the consolidated entity. So net assets, it's always been a measure of financial condition because it really represents nothing more than the difference between our assets, things we own, and what we owe against that. And the net of that, it's like equity or your own sort of house. Think about your house. If you have a house that's worth $500,000, but you owe $300,000, then you have equity of $200,000. That's a good thing. If it were the opposite, like some people are, it's a negative thing. And so we have positive balances, of course, no surprise. But this is supposed to tell you that, okay, what kind of financial condition are we are, but it's really a snapshot. You can only really evaluate this in comparison to prior years, right? What's the trend? Are we getting better or are we getting worse over time? Are these numbers shrinking or are they growing? And I will tell you, generally speaking, they are growing, and they tend to grow from year to year. Individual funds may have some down years, but on an overall basis, our financial condition for the city as a whole is getting better over time. So still with the government-wide statements, this is the sort of the statement of activities. This tells you, okay, how did we do for the year? Are we better off or worse off, and how did that change? And if you look on page 25, this is just the section that you can see for the top section relating to governmental activities. So this is sort of the revenues and expenses of governmental activities. Doesn't include the business type activities at this point. And the way it's organized is on the far left, you'll see the main functions of those governmental activities. And it's not just a general fund because, again, it's beyond that. But it's organized into 7 categories: administration, public safety, public works, community services. That would include library, parks and recreation, and the like. Then there's community development, and then interest and long-term debt. And the whole point of this is to show, if you look at their direct expenses and their direct revenues, so we think about fees and charges that relate to those functions, to what extent are they covering those costs from those fees and charges? And for example, administration, as you would expect, they don't charge fees to customers. That they have a high net negative number. They have $11 million in expenses, but only recover $1.3 million through fees or charges. So on a net basis, they require a subsidy of $9.7 million. Public safety, very typical, $57 million in expenses, only generate about $11 million in revenues through charges and fees, and require a subsidy of $46.7 million, and so forth. So you can kind of see where the different levels of subsidy that's required for each function. I will point out that in administration it's a little misleading because in reality, as you know, administrative departments like finance and city attorney and city administrators, they recover a fair amount of their costs through their overhead. And overhead is not included in the program revenue. It's actually included down below under other, whereas the $9.9 million. So it's a little misleading. So you can see in the far right, the total of those negative numbers, $82.8 million. That's the amount of subsidy required for those operations that come from those items down below that. The largest piece, of course, taxes. Tax revenues are general in nature, and that's what they're used for, primarily public safety, but for other areas where the fees and charges aren't covering those costs. I wanted to point out this number here. This is a transfer that we made, again, going back to 2011. One of the things we transferred from the RDA was we transferred all the parking structures from the RDA to the downtown parking fund. That's where we believe it belonged. And as I said, we had to reverse that. So what you're going to see is that transfer is saying we're going to transfer those assets out from the back from the, maybe I misspoke on that. This transfer of $27.8 million relates to the RDA. I misspoke. I'm not sure if it's the parking structures directly, but it's reversing transfers that were made in 2011 that we're having to undo now. But you'll see the big number really being this extraordinary loss. This is where we're now transferring all of the RDA assets and liabilities from the RDA as of January 31st to the successor agency, the separate trust fund. And so we're really transferring a net of $91.2 million of assets from the former RDA into the separate fund that's accounted for outside of these statements. If we were to sort of adjust for that, we would really be seeing our net assets at the end of the year go up rather than go down by $48 million.